Hi guys, great to be here. Read a funny quote yesterday, and Helen kicked off with that 100-year revolution. And 100 years ago, everyone had horses, but only the wealthy could afford cars, and now everyone has cars and only the wealthy can afford horses. So a lot can complete 180 reversal in 100 years. We're excited to be here because we've been revolutionising our industry, and we've launched some fantastic AI-powered products I invite you to have a look at. You might not know us, you may know us. We've run 20,000 deals and we kick off about 250 new deals every month. But we asked ourselves a question: why is a company in its best state ever at the end of a deal? How could they be more aware of risks and opportunities in their business and take advantage of them earlier? So that's something we've been working on, and we've also done some predictive analytics that can benchmark bidders' behaviour and tell you who's engaged and who's not. So come and have a look. Our mission is to raise and protect potential for companies and investors. And I'd like to kick off and introduce our panellists. And Kerry.
Hi, I'm Kerry. I'm from IQ Capital. We're a deep tech, early stage and seed venture capital company. We're predominantly investing out of the Cambridge ecosystem. Our firm's 10 years old, but I've been in VC for 20 years, so I've seen a couple of cycles.
I'm Catherine. I'm CEO of British Business Investments. That's the commercial arm of the British Business Bank. And we're investing actually across credit and equity strategies, but we're, I think, the second larger investor in venture capital funds in the UK today.
Great. I'm Tim Haines, a managing partner for Abingworth. We are a dedicated life sciences fund. We have about $1 billion, just over $1 billion under management, and we've been around for 44 years, so we've seen a few cycles in the industry as well.
Well, thank you guys. One of the things is the speed of business is placing a greater premium on business readiness. And the other thing that's happening is unexpected events are occurring faster, and they're also much larger when they do occur. So this is placing that premium on readiness, and that's a trend that could potentially disrupt or create advantage for people. So I'd love to hear the panel's perspective on what are the trends in the VC world that you're seeing that you really need to be ready for.
Sam, why don't I have a go? I guess given that we're talking about revolutions today, I'm not sure I would ever have much in common with Karl Marx. And certainly being a card-carrying venture capitalist in Russia was probably not good for one's health. But I think the phrase that revolutions are the locomotives of history is a pretty interesting one and still resonates today. Although I think it's the history piece that's actually maybe the most pertinent to it, because many times you don't know you're in a revolution until you actually look back. And it's quite interesting to think about if we held this meeting 100 years ago, I would guess there may be less than half the people that are currently in this room, including me. Because 100 years ago, life expectancy was in the 40s. Most people died in their 40s. Today, most people die in their 80s. So if you think about revolutions, for a species such as human beings to be able to nearly double our life expectancy in 100 years is a true revolution. There are a number of factors for that. I would say, as you would expect, that healthcare has been a key part of that. Obviously, things like vaccines have played a fundamental role. But what I would say is I think revolution in healthcare is still very much happening today. I think what I would say is the speed of change has increased even more dramatically. I cannot promise that we're going to double life expectancy in the next 100 years, but I think that the kind of things that we see in our world and the world that we're investing in continue to change dramatically. And I think the two particular themes, or sub-revolutions if you like, or skirmishes, whatever you want to call them, one is the development of biotechnology. So this is small, innovative, kind of 100-person type, very focused companies that has really in the last 30 years driven the development of medicines. And if you look at in 2020, 9 out of the top selling drugs will have all come from a biotech industry that didn't exist 30 years ago. And it'll do just under $200 billion in sales. I think the other piece is the role that venture capital has played in seeding and supporting those biotech companies. As you heard, we've been around for a fair while. But an interesting data that we've just picked up is that 9 of our portfolio companies in the last 5 years have all got approval on what will be global blockbuster medicines. So I think healthcare, huge revolution, and the 2 kind of subplots that very much venture is driving and will continue to involve in. I'll let the others comment and maybe come back and pick up some of the more specific themes later on.
Kerry, in your industry, you're dealing with machine learning, AI, deep learning, so you're constantly in a revolution because of how...
Absolutely, we are in
So how do you stay on top of that? How do you maximise the potential?
You have to be informed. You have to really know your technology. I mean, it's amazing how many companies leave our office and going, whoa, that was the first VC that kind of actually understood our technology. We sort of attend very sort of bespoke events. We're privileged to be in Cambridge, so there's a lot of great minds there and a lot of really, really detailed, sort of very specific technology subgroups. So we just learn, read, just work that network and just understand where those technology trends are moving.
And I think just to add to that, at the bank, we work with a lot of VCs that are really revolutionary, like Karen, really pushing forward the boundaries. I think a question we need to ask, are the LPs, are the investors ready to be revolutionary with them? And as one of the largest LPs, are we revolutionary? I don't think that we're particularly revolutionary, but we do have a different approach, which is driven by our mandate, which is to really look at the fabric of the British system, the British economy, and to see what our entrepreneurs and businesses need. And building up from that, we try to work with fund managers that have solutions to help those businesses.
Right. So I can tell you, look, as a CEO, and our company started with 30 grand in capital, now we turn over 35 million, and it's nothing more valuable than what Kerry said, where someone, potential investor or advisor, will have coffee with you and then have another coffee every 6 months, and that's about it, compared to someone who understands what you're up to, does their research, comes back with some very credible insight, and it builds a lot of trust, in the expertise. I think that's great. Tim, what are some ways that you build trust early on? And I just wanted to remind everyone, there's a good poll we've got up, and we'll bring up the results shortly because I'm going to get the panel to touch on it, but back to you, Tim.
Yeah, I mean, I think we are, as all good VCs, I think, you're either predicting revolutions, creating them, or at least participating in them. So I think really following the trends, and obviously we're in a very deep scientific environment in terms of what we do, that has changed dramatically, I think, in the last 10 years, really, whereby a lot of the early science out of academia can now translate into the clinic and can be tested very, very quickly. The underlying science is changing out of all, really some fundamental things that are affecting and will affect all our lives. We were investors in a company called Selectra in Cambridge that is now the standard for analysing the human genome. And we're now less than $1,000 as was predicted, although even more quickly. We invested 3 years ago in a company called CRISPR in Switzerland. It was a 3-person company in those days. And this is a tool that allows you, now that we have the blueprint of biology, this tool allows you to come in very precisely address and change particular parts of the DNA to affect mutations and to therefore address particularly genetic diseases. So from a 3-man company, we then moved it with others to the US. We floated on NASDAQ. It's worth about $700 million today, a huge amount of capital from the pharmaceutical industry. But to the point of, how do you get into these deals? We're very much front-loaded, trying to understand what are going to be the next real game-changing trends in life sciences. And in the current environment, if you get good technology, the public markets absolutely resonate. But the other kind of semi-revolution, if you like, is the realization of pharma that the not invented here syndrome does not work. And if you went back 20 years ago, Merck, probably 90% of their drugs were in-house developed. There now will be about 50% will come from biotech and externalization. And that's having a huge impact on what we do. In particular, it takes away refinancing risks. That's probably the biggest change in our early stage investing, because they're either buying companies early, doing deals, or they're doing some really interesting structures. We did a UK deal called Gamma Delta last year. We seeded it within a year. Takeda's come in, they put in a significant equity component, but also committed $100 million in non-dilutive capital with an option to acquire. Now, it does cap the upside, but given that we own over 40% of the business, if they do exercise it, the multiple is great. But for us, it takes all the refinancing risk completely off the table. So that's a real significant change. It means we've got to certainly understand the science pretty darn well, but we've always had to do that. But our relationships with pharma, which is really our primary end customer, we will IPO, but pharma's where we get the good multiples in a timely fashion, has changed out of all recognition. And to underscore that, Eli Lilly has become an investor in our new fund. So that relationship has changed.
I think that's quite an important point, actually, because if you think about corporates more broadly, they are much more active in VC today. It goes in waves, but there's definitely a wave happening, and you probably read about what Apple is doing in Oxford, and we're seeing more of that. I think we just need the traditional investor community to sort of catch up with what they're seeing in the venture world.
Yep. Might bring up the poll results if you can do that. The question on the poll was if readiness equals faster and simultaneously better performance, what would be the greatest area that would be impacted for you guys? And the results will pop up in a minute, but half of the room said it's actually raising the potential and performance of your portfolio companies, helping them grow, helping them scale and navigate risk. And Tim and Kerry particularly, like given some of your investments can really explode and it could have a more technical sort of founder base when then they start to encounter challenges. How do you prepare and keep them ready to scale efficiently?
For me, it comes right from that very first meeting. So in our world, we're looking at the seed and early stage. We're looking at those deeply technical founders. They're incredible. And they need a certain set of skills. They need a certain type of advice. And it all starts at that first meeting where you're gaining that trust and that respect. As I said earlier, trust and respect from actually understanding their business, but also the experience to guide where needed and interfere where needed and set them back on the path where needed, to introduce them to our huge network of people that we've got in, across our network built over many years. And it's just getting that connection so that throughout the life of that investment, we're used as a sounding board. So when they have a problem, they might not know the answer, but they pick up the phone, they talk to us all the way through. And you can measure this in your board meetings. At board meetings, I very, very rarely am surprised by some major strategic sort of decision being discussed, or I just don't hear about that. I know what is happening with the business the whole way through. You have that trust and respect, and you're their sounding board, and that is the best way to make sure the fundamentals are right, so they're hiring right, the strategy's right, and they're entering the market and reading the market correctly.
Yeah, I think the blocking and tackling of executing and supporting companies. I hope most VCs and the maturity of the industry are at a point where, broadly we understand that pretty well, bringing good management teams, when to get involved, when not to get involved. I think the life sciences parochial world, we're heavily front-loaded in what we do. And by that I mean, if we invest in a company, we're usually committing significant amounts of capital. We just did a spin-out that we announced from a UK university, and we're committing £30 million up front, which a venture fund is actually quite a big number, because you need to get there's a critical mass required to start them up, where IP is really fundamental to what we do, and clearly understanding the science is absolutely critical. So I think the front-loading piece for us is very important. And in the current environment, it's particularly interesting because there are cases where you don't need to worry too much about the execution. We invested in a company 14 months ago, very early science, and it was acquired by BMS 2 months ago. It's a $2.6 billion bio-dollar number, but it's fantastic return for us over a very short period of time, which tells you that if we do the upfront piece well, put the right team in place, you clearly don't want to. You hope for the best but prepare for the worst, that we're going to have to build this thing out. But if we're making the right judgments in the current environment where the pharmaceutical customer is really active and interested in getting access to real breakthrough science, that's what makes the difference for us.
Yep. Yeah, the poll's not coming up, but the other top performer in there was sourcing and originating deals. 45% of the room said if they could do that faster and better, that would be the most impact for them compared to exiting or growing performance. How do you gain an edge in originating and sourcing deals? You probably don't want to give away any secret sauce, but how do you differentiate and connect and sort of gain an edge in finding those best investments?
So for us, we're investing in companies related to the Cambridge ecosystem. So there are thousands of touch points in Cambridge. It's an incredible place. You know, it's 4,500 tech companies. It's incredible. There's loads of R&D research centres. It's huge. A lot of activity. But there's not a single door. So it's taken a long time, that old-fashioned route of networking, of talking, of speaking to the founders, you know, and really making sure it's absolutely entrenched in that community. And that's where our deal flow will come, because we're referred and we're recommended.
So most of your deals are by referral from that network?
A vast proportion, because we're tracking them early and we're looking, as I said earlier, we're looking at specific trends. So we're going into those sectors and saying, let's have a look what's happening in the, you know, supercomputing lab, or, you know, we're meeting them early.
Yep.
Watching them develop.
Good strategy.
Yeah, I mean, I hope there's no pharmaceutical companies in the room, because you would think they would be a good place to get ideas as to what we should be investing in. But actually, large pharma tends to have quite a herding instinct. And for us, while, you know, we love them dearly, they're very important people and all those good things, we've got to look ahead. We've got to look beyond what's in their pipeline. And therefore, for us, and again, we're fortunate in a nice environment where there is a real appetite for pharma to acquire early technologies. We've kind of got to go earlier, which means getting access to universities. Some of our colleagues are even setting up small labs themselves, so they're really going very, very early. That's not something that we're contemplating. We think there's some fantastic science, but it does mean going earlier into academia, getting much more, we've always been hands-on, but getting much more hands-on in creating these companies. And particularly in areas where, you know, there's not a huge crowd of venture capital groups. Europe is a great place. There's a shortage of venture capital, which is good news and bad news. The good news is valuations are pretty good. The bad news is you've got to do a heck of an amount of work. So that's really, we're going a lot earlier, and we're very happy to do that, at least for half of our portfolio. We do have some other things that we do that really complement the early stage. We invest directly in public companies through an approach called VIPES, Venture Investing in Public Equity. And we have a very interesting clinical co-development part of what we do, which again reflects farmers' pressure on their earnings per share. And we literally take phase 3 products off their balance sheet, off their P&L. We have 2 separate companies. We fund these assets as separate companies through to a pre-agreed exit. So relatively short time frame, a defined exit that again complements the early stage really well.
Mm. And Catherine, in your space, what are people doing that gets your interest early on and can connect with you?
Yeah, well, what we try to do as well is to build quite a broad portfolio in terms of the stage of investment that our managers are addressing. Mm-hmm. So that translates into us having investments right from the very early stages through to venture growth. So it's quite a broad spectrum. The way that deals are originated across that spectrum are very, very different. And that's something we spend a lot of time on in the due diligence to see what the competitive advantage is there in terms of getting those deals, because indeed, sometimes having a good brand, having the capital, having those networks is what makes the difference between getting the better opportunities.
Yep. I want to turn to strategy, where good strategy is where priorities are, you know, objectives are aligned and coherent and, you know, not competing or conflicting. What have you found works in terms of aligning your firm's strategy to that of your portfolio companies, so it's more coherent rather than competing? Perhaps you have some stories of things you've learnt from the past of how not to do that, or things that are great, but yeah, keen to hear your thoughts.
And we have to do that in less than 5 minutes because Tim here is saying 5 minutes.
So really quickly, we don't charge our portfolio companies fees. You know, we learned that there's just no point to be malaligned at that stage in this seed and early stage. So yeah, that would be one I'd say.
Is that something you did do, and then you?
Yeah, it is. Yeah.
Oh, and then you took it away.
Yeah.
Okay. Yeah. Tim.
Yeah, we again, the last 5 years have gone out of our way to get to know senior execs at pharma. We now know them extremely well, formally, informally, because of this change in their need to externalise research and development. And that clearly is fantastic for our portfolio companies. So if our portfolio company is ready to talk to pharma, we can open the door up pretty much to any of the large groups, allow them to get in front of them and to develop these kind of deal opportunities. So that's probably the most significant thing. But you know, we as a firm, we've got a very strong back office group, and I think everything, everywhere from helping them build business plans, corporate research, legal counsel, recruiting people. We have just one person in Europe who all she does is track quality people in Europe, because again, that's a challenge for our industry, getting good serial entrepreneurs. So I think it's really providing a full service, and I think service is the operative word, to our portfolios and their CEOs.
Yeah, so you're co-developing those objectives with them, and
Exactly.
Yeah. Okay, that's good. This is an ambitious question, Tim, for like a few minutes, but if I gave you guys a mission and you were to revolutionise the VC industry and start a firm from scratch, what are a couple of principles that you'd make sure that you pursued?
I'd use more technology and I'd use more data.
Yep.
I'd try and persuade LPs to have a longer time horizon than 10-year funds. We invested in a company called Gilead, which is now the largest biotech company in the world. We made a very nice multiple on exit. If we'd held it for another 15 years, we'd made 1,000x. And biotech is very much, it's the 15 to 25 years. So that's, if I could persuade some good LPs in this room to think a little bit more longer term, I think we could juice up the returns even more than we have them today.
Yeah, and I think if I wind myself back 17 years to this summit and the dinner the night before, if that's okay, and I was sat at the dinner and a lovely gentleman would come up to me and say, "Oh, could you just be a love and just go and grab some more napkins?" And I'm sort of like, "Well, okay, I'll grab some more napkins." "Oh, could you be a darling? We've just run out of wine." And I was like, "Okay, I can do that." And then obviously the next day it was slightly embarrassing when I was sat on the panel discussing why we'd given Autonomy their first million. And I think that is the point here. So I'm part of a revolution. I'm very proud to be part of a revolution of getting more female decision makers into venture capital. Yeah. And thank you.
Yeah, that's great.
And I think it's something that we need more of. We need more of, and because we give a very different perspective to these businesses, and it's important. So.
It is very important. Well, I think we're out of time, Tim. Love to thank Kerry, Catherine, Tim. Thank you very much, and thanks everyone, and enjoy the lunch break, I think.
Thanks.